Welcome. Welcome to the Deep Dive. Really glad you could join us today. This is where we try to give you a quick but really thorough journey into what's happening in crypto right now, things that matter. Our goal, as always, is just to cut through the noise, make sense of the complicated stuff, pull out the key insights, and hopefully leave you feeling, well, properly informed. So today we've got three big things lined up. First, a really high-stakes legal battle involving a privacy tool. Big implications there. Then we'll jump over to Bitcoin. Its price has been doing some dramatic things lately, the kind everyone notices. And finally, we're going to look at a really interesting, maybe high-risk crypto lending model. Pretty innovative stuff.
Yeah, and what's fascinating, I think, is how these stories, they seem separate, right? But they actually connect. They really paint a picture of the current landscape, blockchain, DeFi, digital finance. It's all moving so fast. Honestly, understanding these details is, well, it's pretty crucial if you're trying to navigate this space. Helps you see the forces at play.
Okay, let's dive into that first one then. The Tornado Cash legal battle. This one feels pretty foundational. Roman Storm, one of the developers behind the protocol, he's facing some serious legal challenges. And now he's put out this urgent call for support, asking for another $1.5 million. Apparently, the legal costs are just rocketing up, and the trial is already in its third week. Must be intense. And just to give you some numbers here, this isn't the start of the fundraising. They've already raised over $3.2 million for his defense fund. That's, what, about 65% of this new $5 million goal they've set?
Right, and it's not just small donations either. I mean, the Ethereum Foundation itself chipped in $750,000. That's significant.
Wow, yeah. That tells you how seriously people are taking this in the core crypto community.
Definitely. And maybe we should quickly explain what Tornado Cash actually is for anyone listening who isn't familiar. Fundamentally, it's an open source tool. Its whole purpose is to boost transaction privacy on the blockchain. So think of Tornado Cash like a digital privacy shield for your crypto. It's designed to kind of mix things up, obscure the path of funds, makes it way harder to trace where crypto came from or where it's going.
Okay, so like digital cash in a way, offering that kind of privacy.
Exactly.
Yeah.
Similar to how physical cash works, Once it changes hands a few times, tracing it back is tough. And for a lot of people in crypto, that privacy isn't just a feature, it's like fundamental. Financial freedom, autonomy, that sort of thing.
Right, so the implications of this court case, they must be pretty huge then.
Oh, absolutely. This trial could set a major legal precedent, a really critical one. The big worry is that it could end up criminalizing the act of just developing privacy tools, or even using them.
Just for writing open source code.
Potentially, yeah. And that's not just about Tornado Cash itself. It casts a shadow over, well, all of decentralized finance, DeFi innovation, if developers start getting scared about legal trouble just for building privacy-enhancing tools.
Yeah, that would definitely put the brakes on things. A chilling effect, I guess.
Precisely. A chilling effect. It could stifle the whole ecosystem. And beyond that, it could seriously limit digital privacy rights for everyone. We could end up in a digital world where every single transaction is just out there, trackable by default.
That really changes the game.
It really does. It challenges that core idea of user control and privacy that, a lot of blockchain tech was built on.
So this isn't just about Roman Storm's legal troubles. It feels much bigger. Like it's testing the whole idea of open source software development, right? And that tricky balance between innovation, privacy, and regulation in this digital age.
You hit the nail on the head. It's far bigger than just one person or one protocol. If the verdict goes against Storm, the most immediate thing I think is developers everywhere will get nervous. Very nervous.
About building anything that could be misused.
Exactly. Even if the main purpose is totally legitimate, like privacy, they might just decide it's not worth the risk. Innovation might go underground or, move to less regulated places. It forces this really tough question about what counts as a neutral tool versus enabling bad actors.
Yeah, that's a tough line to draw. Okay, shifting gears now, let's talk about something maybe a bit more immediately tangible for people watching the charts. Bitcoin's price. It's certainly been an interesting ride lately, hasn't it?
Understatement of the year, maybe?
Well, on Sunday, Bitcoin seemed to get its mojo back. It climbed back up, trading above $119,300. Which was a nice recovery, especially after that dip we saw on Friday. It went below $115,000 for a bit there.
Right, that Friday dip caused a bit of a stir.
Yeah, and apparently we now know, or think we know, what caused it. Seems like it was triggered by a pretty massive sale, 80,000 BTC.
Wow, 80,000, that's a huge block.
Huge! And apparently from a Satoshi-era Bitcoin whale, Galaxy Digital handled the sale for a client. But what's really interesting, I think, is how quickly the market just soaked it up,
Mm.
absorbed that massive sell order.
Yeah, that is notable. Usually a sale that big would cause more waves, last longer.
Right. It kind of speaks to maybe some underlying strength or depth in the market right now. Demand is still there.
Absolutely. It suggests maybe a stronger demand floor than people thought, perhaps more institutional money absorbing these dips. But it definitely brings us to the question of what happens next. Bitcoin's price is hitting a tricky spot. Okay, think of it like this. An analogy might help here. Imagine Bitcoin's price is like a climber trying to scale a mountain.
Okay.
Right now, it's hit this really tough, rocky ledge, what analysts call a strong resistance level. Specifically, it's that area between $119,000 and $120,000.
That 120K mark.
Exactly, and it's not just a random number. There are what they call dense liquidation clusters there.
Okay, what does that mean in simple terms?
It basically means a lot of people have orders set up around that price, sell orders, maybe stop losses or hedging positions. So there's a lot of potential selling pressure concentrated right there. Makes it hard for the price to just punch through easily. It's like a ceiling.
Gotcha. So breaking through that ceiling would be a big deal? Bullish?
A very big deal. Yeah, very bullish. Could signal the next leg up, but if it fails to break through, if it gets rejected there,
Then we could see a pullback.
could see a pullback, yeah,
Okay.
as traders kind of reassess and maybe take profits. So analysts are definitely watching this closely and predicting potentially larger price swings soon. It's just the market reacting to this critical level.
Okay, so if you're watching the markets, this 119K to $120K zone is, well, it's really where the action is right now. Could dictate the short-term trend, basically. Super interesting to watch.
Definitely a key moment for price discovery.
All right, from market mechanics, let's move to our third story. This one is about innovation in lending, but with a twist. We're looking at a San Francisco company called Divine Research. Since December, they've apparently issued around 30,000 crypto loans. Short-term ones. But here's the kicker. They're unbacked. No collateral.
30,000 unbacked loans since December. Wow,
Yeah,
that's
ambitious. Ambitious is one word for it. And how do they manage the risk? That's the really unique part. They're using World ID, Sam Altman's OpenAI iris scanning platform.
that eyeball scanning thing, right?
Yeah. They're using that decentralized ID system to verify borrowers. And the main goal seems pretty practical. Stop people who default from just opening up a new account and getting another loan.
Okay, that makes sense. If there's no collateral, you have to know who you're lending to and prevent identity fraud or, well, gaming the system. So what kind of loans are these? Who are they lending to?
Good question. Apparently, the loans are pretty small, under $1,000 usually, and they're in USDC, the stable coin, so the value is stable.
Okay, so less volatility risk for the borrower.
Right. And they're mainly targeting borrowers overseas. People often described as underserved by traditional finance.
Ah, so the unbanked or underbanked population?
Exactly. Folks who might not have easy access to banks or credit in their home countries.
The founder, Diego Estevez, he actually called it microfinance on steroids.
Uh-huh. Okay. That's quite a phrase.
Yeah, he said it reaches average folks like high school teachers, fruit vendors, basically anyone with access to the internet, using crypto's reach.
So bringing financial access, but it sounds risky. What about the financials? The interest rates, defaults?
Well, yeah, here's where the steroids part might come with side effects. The interest rates are high, like 20% to 30%.
Ouch, that's steep.
It is. But Estevez argues it's necessary because the default rate, especially on the first loan, is apparently around 40%.
40%? Wow. Okay, that explains the high rates. That's a huge risk profile.
Huge. And they have one other sort of mechanism. Borrowers get free World tokens for signing up with World ID. If they default, Divine can apparently reclaim some of those tokens. Partially. Reclaim them is the word used.
So it's like a small backstop, maybe?
Something like that. It's a really bold experiment, isn't it? Using cutting-edge tech like biometrics and crypto for financial inclusion, but yeah, the risks are undeniable. Pushing boundaries for sure.
Absolutely fascinating. Using iris scanning to try and solve the unbacked lending problem for the underserved. But yeah, those default rates and interest rates, it really highlights the trade-offs. Makes you wonder how sustainable or scalable it is.
Exactly. Time will tell on that one.
And just like that, we've covered quite a bit of ground again. That wraps up this deep dive. We started with that really crucial legal fight over Tornado Cash and crypto privacy. Huge implications there. Then we watched Bitcoin doing its high-stakes dance around that key $120,000 resistance level. Always exciting.
Or nerve-wracking, depending on your position.
True. And finally, we looked at Divine Research and their let's say, audacious approach to micro-lending using World ID.
Yeah, and taken together, these stories really show that dual nature of crypto innovation, don't they? On one hand, you have this incredible potential, new financial tools, more personal autonomy, reaching the underserved. But on the other hand, you've got these evolving legal battles, market volatility, and, well, significant risks with some of these new models. It leaves you, the listener, with a pretty important question to think about, I reckon. How are these tensions between potential and risk, between innovation and regulation, how are they going to shape the future of our digital financial world? And maybe what role do you play in understanding it all?
That's a great thought to end on. It really is a space that demands attention and understanding. We really hope you found this deep dive useful, maybe spark some thinking. If you did enjoy it, please do us a favor, follow, maybe share it with someone else who's into this stuff. And hey, for more insights and updates, make sure you follow What Bitcoin Taught Me. We're on Twitter, X, Nostar, Blue Sky, Threads, Instagram, Facebook, and LinkedIn, all the places. Thanks so much for tuning in today.